All right, I want to get to your 2025 outlook in just a moment, but first, let's start with December. Obviously, this is the first trading day of December. We hit the historics, 2% rise in December historically. That's the median gain. Do you see history repeating itself this year?
This could be a strong December, but watch out. So let's look back at what happened last time Trump won in 2016. We saw small cap value stocks kill it, absolutely did great on America First policies, followed by US stocks, then lagging, totally lagging, were emerging market stocks thought to be the most negatively impacted by Trump's policies. Yet what happened in 2017 was the exact opposite. Emerging market stocks were up nearly 40%. US small caps were the worst performers. So be careful about these Trump trades. While they may continue to play out in December, playing out next year, there could be other factors at work.
All right, so you think things could change a bit. Let's get to your 2025 outlook. So according to your recent note, Reddit, it's great stuff as always, Jeff. You say there's three hurdles that are coming up next year. So one's trade policy, one's tighter fiscal policy, and then the other one's slower than average growth. How does that shape your view of the U.S. markets compared to international markets? And also, give us your top pick internationally.
Yeah, so the economic growth in the world is probably going to be the same next year as it was last year, 2024. But what we're seeing is the US and China expected to slow next year. Nearly everywhere else, though, growth is expected to improve. And as a result, earnings growth may also improve and combine with rising valuations supported by central bank rate cuts to boost returns for stocks in the international markets. Now, to outperform, we've got to see market leadership broaden from the US AI-driven stocks to other sectors. I think it's interesting that financials have actually been the best performing sector in Europe in the second half of the year, taking the lead away from tech. And that could be a sign of shifting leadership in 2025, helping to support strong returns for global markets next year.
Okay. Did you give us your top pick internationally? I mean, is there one market in mind that you think is going to be the best?
Believe it or not, I'm most excited about Europe simply because they're coming off of rolling recessions. To Germany, France, a number of other countries have been through recessions in the last 6 quarters. Their earnings growth is accelerating next year, and their valuations are coming off below average levels. I think there's opportunity there, both in terms of E moving up and the P of the P ratio moving up as well.
All right. I want to get back to your note because I thought it was pretty interesting. Back to the U.S. Let's focus a bit more on the U.S. And again, this is from your note. It's a chart showing tariffs back in 1930 with the Smoot-Hawley Act, right before the Great Depression, of course. Tariffs during the first Trump administration, then the proposed tariffs for this administration. So you put this title in your note, Great Depression 2.0 with a question mark. So I just want to get your take. These proposed tariffs, these effective tariffs, in your mind, how do they potentially impact the market? Again, they are just proposals. Some people think they're part of a negotiating tactic. I want to make that clear. But in your mind, if we see anything close to these proposed tariffs, how does it impact the markets?
Oh, if we saw anything close to those tariffs, certainly that would be devastating and could be potentially another deep recession for the world. That seems very unlikely to me. I think Trump is using tariffs as statecraft policy rather than economic policy. If you take a look at a trade war scenario analysis by the IMF published in late October, they estimated a drag of less than 0.1% on the globe's GDP in 2025 from a global trade war across the board tariffs. I think there's a very big difference between proposed tariffs and what we'll actually see.
All right. Really thorough note, Jeff. I want to get to one other point in your note. You kind of have like a cautionary data point in there. You're focusing on Brazil and the fact that inflation's actually on the rise in Brazil, and their central bank's actually hiking rates while we're looking for cuts here in the U.S. Why do you think investors should at least pay attention to what's going on in Brazil?
It's a great point. And this is one of the risks to the outlook. Brazil was one of the first to start cutting rates back when inflation just started to come back down again. And what we've noticed around the world is most countries over the last month or so have started to see inflation creep back up again. And some of the leading indicators of inflation I'm watching are pointing higher, at least in countries like the U.S. So there is a risk of renewed inflation pressure, keep maybe cutting short central bank rate cuts, or maybe even bringing the idea of rate hikes back to the table, as we've already started to see in Brazil, sort of a leading indicator of central banks around the world. So it's one of the risks I'm watching next year, given how much the market is focusing on continued rate cuts in 2025.